Now, on Tuesday, Stats SA announced that South Africa's GDP had contracted 51% between April and June, using annualised quarter-on-quarter numbers. In other words, this is a 17% decrease for the quarter as a result of the lockdown imposed in response to COVID-19. For a look at how long will South Africa be in this depressive economic state, we're now joined by Andrew Duvenage, who's the Managing Director at NFB Private Wealth Management. Thanks so much indeed for joining us and welcome.
Thanks for having me.
All right, so I guess it is the new normal, this abnormal world we're living in, because if the stock markets woke up to a 51% drop in GDP, they would have crashed, but it didn't happen.
Yeah, I think markets are forward-looking, and the number was pretty much expected. I think as you started off with, is it wasn't a 51% collapse in GDP, it was 17% for the quarter, and if you extrapolate that, it would decrease at 51% in a year. But nonetheless, I think markets were expecting it to a large extent, but it's a shocking number, and it's going to have significant ramifications for the country in terms of the budget deficit, in terms of tax collection, in terms of credit ratings. There are a whole range of things, of impacts which will come from this.
We saw some better news from the mining sector. They're starting to see a better recovery. Does that mean generally we can start to say maybe we've hit the worst and things should start to get better from here on in?
Yeah, look, when you see a number that's as negative as this, it's unlikely now that the economy's opened up that you won't see recovery from here. But the question is, how quickly will we recover? There's a lot of lost ground that needs to be made up. And then you need to maybe widen the lens slightly and look at it and say, it's not just the COVID-related economic contraction that's the issue. Is South Africa's been in a state of near zero economic growth for a period of about 5 years. And that actually is the fundamental problem, is there are fundamental issues with the structure of the economy, in our opinion. And until those things are dealt with, it's highly unlikely that we'll be able to see significant economic growth that can make a meaningful dent in unemployment, which going into COVID was already at catastrophic levels. To deal with the unemployment problems, the disparity between rich and poor, and the inequality in our society. So the COVID issue is obviously of great interest. It's shocking in terms of the absolute number, but the issues are far more systemic in this economy and predate the COVID crisis.
I would imagine that the COVID crisis does give government an opportunity to be quite revolutionary in trying to fix the problem, because it will be seen as, extraordinary times requiring extraordinary efforts. What might those things be that could re-engineer our economy?
Well, one would hope that that's the case, because quite frankly, I think government has run out of time in terms of the fiscus. We have too much debt on the books already. We know that the budget deficit is going to blow out significantly because tax collection will fall and expenditure will rise. And in order for the country to avoid the IMF, if at all possible, in the form of a bailout, significant interventions are going to need to take place. The question is whether the ruling party has the political unity, let's call it, to actually make these decisive actions. So when we went into the budget period, Minister Mboweni was saying the right things, and it was a budget that was well received in terms of dealing with the public service sector wage bill, decreasing bureaucracy and inefficiency in small business, bringing the private sector in terms of financial capacity and skills. And those are exactly the things that need to happen. And I suppose it's every South African's hope that these things happen and that they happen quickly, because the luxury of runway is gone. We are really, really staring into the abyss here. So you hope that would give the impetus to those policymakers to implement quickly and implement effectively, because we just don't have time on our side, given where we are from financial perspective as a country.
All right, so using an economic term that you guys throw at us often, ceteris paribus, all things being equal, How long is this likely to play out if we carry on the current trajectory? Because there's always that contingent liability of a second wave, isn't there?
Absolutely. And if all things are equal and all things continue as they are, I think we're in desperate trouble. The reality is that change needs to happen. It needs to happen very, very quickly. As we know, once again, step out of the COVID space and look at the challenges that we have with state-owned enterprises, the challenges that we have with the public sector wage bill, we can't continue as we are because we were already in crisis before COVID. So the intervention needs to be decisive. It needs to be quick, and it needs to be effectively implemented. And that's probably been the Achilles heel in South Africa for an extended period of time. Is while potentially the right things were being said and the policies you could argue are there, is the execution of those has been poor, and it's led us to a state prior to COVID. The tragedy with COVID was we went into the COVID crisis in a state of crisis, and unfortunately, it's just a collusion of terrible factors that we now find ourselves with. And if we are to navigate away from basically bankruptcy as a country and not add more debt to the pile, there need to be radical interventions in terms of policy, as we've discussed.
All right, Andrew, thanks very much indeed for giving us your insights today, and we appreciate it. Thank you.
Thanks for having me.